What's up guys, Vulcan Trader here. I'm going to do a video on my kind of fundamental analysis on why I like MicroStrategy stock over BitQ and why I'm buying that, and some interesting thing happening there. So first off, let's look at this. So MicroStrategy was down here. It was pretty much following the drop of Bitcoin the whole time, and then now it turned up, but it's holding up. You see, it hasn't really had a correction since right here, whereas if you look at Bitcoin, it dropped down this week, but MicroStrategy held up, so it's showing strong relative strength for some reason, and so that's one thing. Whereas if you look at, so let's look at our other crypto. So this is my list of all the crypto stocks. I got, see, the other ones popped up, went down. This is, that's not a crypto. This is a fund actually. We're not gonna. I don't know what this one is. I forget, but. Yeah, see, it's not really doing anything. Coinbase, for example, Coinbase, popped up, went down also. Mara is Mara held up a little bit, but it still dropped down, whereas, MicroStrategy would still be holding up here. So Mara dropped down, it probably dropped down here and fill the gap. And then Riot, same thing, it dropped with Bitcoin some. So, but anyway, you can, and Can is creates miners, same thing. So anyway, we look at all these. Pretty much all these are red, and this one, but it didn't even really get any gains in the first place. And see, this whole list, everything's red. MicroStrategy's green. That's pretty significant in my mind. Either Michael Saylor, the CEO, has been on CNBC, and so CNBC is like your finance news for boomers, pretty much. And they'll buy stuff that's on there. I mean, maybe other traders do, but I don't know of any millennials or what is it, Gen X or Y or whatever they are, that watch that. I don't even watch it. I think it's boring. But anyway, he was on there. Maybe they're buying it, but I think it's something bigger. Maybe if that's the case, then maybe this is just kind of a fake out. Maybe we'll get a crash and it's just holding up temporarily, and then we get a dump here. But there's some pretty strong volume coming in, boom, 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 and strong volume here. So it makes me think maybe there's more to go, but I'll get into why that is and what. But anyway, there's some other thing that's causing their price to go up just than Bitcoin, if that makes sense. And they did do 2 new issues recently. So they've got, as far as how much, so they've got 91,000 Bitcoin as a percent of their that Bitcoin. So we do 91,000 Bitcoin, or what, 91326. 91326 times the price of Bitcoin right now, which is crypto. Where's my Bitcoin? There's 36,000, whatever. Times 36,000. So that's 3,287,000,000, roughly, whatever. Their market cap is 6 billion. So meaning, we can go back to crypto stocks. You see, same thing here. Market cap is all the shares times 646. There's, where's it at? So how you come up with market cap is, they have 7.7 million shares times 646, and that equals 6 billion. So about half of their market cap is just comprised of the Bitcoin on their balance sheet, and they're a, let's see, oh yeah, and then they're going to be buying more Bitcoin. So they just they created a separate entity to hold this Bitcoin, so that they bought these at like almost near 0% interest to the bond market, and then they're doing a 6% bond debt to buy like another $500 billion worth of Bitcoin. So they'll have over 100,000 Bitcoin once they do that, and then they did another thing where they authorization to sell up to, I want to say it was $1 billion of their stock at any point for even more Bitcoin. So they're gonna buy about 1.5 billion more, if I'm not mistaken. I follow Michael Saylor. Let's see. Let's pull up Twitter and see if. Whatever. Anyway, I follow Michael Saylor on Twitter. I'm pretty certain that's what it is. He makes his announcements, but. Anyway, so they're going to have over 100,000 Bitcoin at this point, and then we're going to talk about why that matters, and most, like a software company, I don't know what it is, but usually they're not really a growth software company at this point. It's a business intelligence software, which is the space I used to be in, so I know it pretty well. But like the leaders are, I don't know, maybe like Tableau, Power BI, stuff like that, and Oracle has some stuff. But anyway, MicroStrategy's been around for a long time. I never really used their stuff. It was kind of I would consider it a laggard as far as their software. But so this is what happens whenever companies get well known, and so we're talking about the law of reflexivity, and this is what I think's happening. So, but anyway, as far as a percentage of their market cap, they had the most Bitcoin. It was even better before the dip, or during the dip here, but still, large amount. The only one's close is Galaxy Digital Holdings, but I don't know too much about that one. But that's a Canadian company. I think it's BRPHF. If you want to look at that one, but anyway, MicroStrategy is the number one as far as percentage of market cap. That basically you're just buying straight cash on the balance sheet or Bitcoin on the balance sheet. And then the other half is pricing and their growth or their company sales for the next, however many years, discounted cash flow analysis if you're going to do that. So that all being said, so there's something called, George Soros has something called the law of reflexivity. George Soros, I don't think he's a good person, but he's an amazing trader. Broke the Bank of England, they say he broke the Bank of England. He made like $1 billion in a day whenever the euro lost its peg to the Deutschmark, I think it was. Or no, not the euro, the British pound lost the peg to the Deutschmark. Anyway, cool story if you want to look it up. But anyway, but George Soros' book, it's called, I don't remember what it's called, but it's, let's see. Anyway, it's I've tried to read it. It's super boring in that it's really hard to understand, and he uses all these complex words and stuff. I read maybe a fourth of it, and I can understand it, but it'd be very difficult for the most people to understand. But he basically expounded upon it way too much, more than it was necessary anyway. And if you want to actually learn about it, you can the Investors Podcast, my cousin Preston Pish's podcast. They talk about it on there. They did a book review of it. They read it and did, you just listen to a 1 hour podcast and you learn about it. But essentially it's like Tesla would be a good example of the law of reflexivity. Tesla stock went up, not really because they made any money on their cars, but because Elon Musk had so much hype that so many people bought the stock, that the stock went up, that they could issue more shares to buy the stock, and then the stock got more hype, which caused the company to get more hype, which caused more people to buy it, and then they were able to get better engineers to build their car. And I think their cars and their battery packs and all that are great. They never really made any money off of them still, I don't think. It's more from the credits and whatever, but anyway, that's caused their stock to grow, more hype, and everyone to like him more, and that causes more engineers to be interested in working at the company, and because their stock goes up, they can sell more stock to get more money, to hire better engineers, which allows them to get more tech. So it goes in a circle is what happens. So this could be happening with MicroStrategy. I think they're getting so well known because all the Bitcoiners love him. They call him Captain Sailor, and then he's just buying more and more Bitcoin. He's on CNBC now. He's becoming a pretty well-known name, and his MicroStrategy is as well. And then, so they're going to own Bitcoin. Their stocks already went from, on the first run here, went from, 120 or something, all the way up to, went 10x to 1200. And it might go another 10x if Bitcoin is a second leg here. But anyway, so they got way more money, let's say 5 times as much money from the, as they did before, which means they can hire more engineers and that are better to make their software. Business intelligence software is like a staple software that any, even small business, but any small, medium, large cap company, small cap from a stock standpoint, needs in order to analyze their business numbers and whatnot. And so they're able to hire better engineers, and no one really cared about being a MicroStrategy certified person or whatever in the business intelligence space before. But on LinkedIn, because I have people I'm connected to like that, they I saw probably 3, I want to say, people posting that they're MicroStrategy certified, and or maybe they even already had it, but they're proud of it at this point to have it and work for MicroStrategy because they're becoming a very hot, well-known company because of their crazy Bitcoin allocation. And so anyway, so they're getting more money, getting better engineers, or their engineers are proud of it. They could probably hire better engineers, and more people want to work for them now. Any Bitcoin software engineer might want to work for MicroStrategy, possibly even. And they're acquiring more Bitcoin for more debt, which I think is a winning strategy, because that debt's going to get devalued as money goes up, and so I don't think there's any problem with it. And that new debt at 6%, it's a separate holding company that can't touch the original 91,000 Bitcoin. So, but anyway, that's the law of reflexivity. It's going to go in a loop, and so we could be seeing MicroStrategy potentially is not only a Bitcoin company, but it's a growth stock at this point. Growth stocks might trade at 30 times sales or something like that. I don't know what their sales is, but I wouldn't say I'm great at analyzing that stuff, but whatever it is, they could start seeing more sales of their business intelligence software, and then they're going to buy more Bitcoin with that, and so on and so forth. So if you own just Bitcoin, you get the Bitcoin price appreciation, but if you have a growth company, I'm not saying this is going to happen, this is a potential. They turn into a growth company that trades at a multiple times sales, and they're going to put all that extra cash, because they're a profitable company, into more Bitcoin. So do you get Bitcoin, but you get a company that's growing, and they're acquiring more Bitcoin, which is also going to go up. It's a pretty sweet setup. So that is why, why I dumped BitQ ETF. So we look at the holdings in it right here. Google BitQ, top 10 holdings of it. And it actually was Coinbase's highest, but then maybe Riot and MicroStrategy went up. They were maybe number 2, but now MicroStrategy is the largest holding because it's growing the most. Why do I want to own Riot Riot's a miner? Yeah, they'll make more money if the price goes up, but Riot doesn't hold that much Bitcoin compared to their percent of Bitcoin compared to market cap is only 1%. So they make all this Bitcoin for mining, and they're growing, but yet they don't keep it in Bitcoin. And Coinbase is the same thing. They're a crypto exchange, yet they don't keep hardly any Bitcoin on their balance sheet wherever they are on here. They probably saw them. I don't even. They're there. I don't know. But I know it's low, whatever it is for Coinbase. So why do I want to own this index? Yeah, they'll get price appreciation because they make more as Bitcoin goes up, but they're not holding Bitcoin. So whoever has both makes Bitcoin or makes some sort of cash flow and they buy Bitcoin, same difference, and they hold a large balance of Bitcoin on top of it. And if they're a growth company on top of that, you could say some of the miners are growth companies, but those three things combined is possibly the best combo that could exist for an investment at this point in time in my mind. So that's why I sold my BitQ and I'm buying and holding MicroStrategy. That makes sense. So law of reflexivity, and then let's see, the Investors Podcast, George Soros. Let's see if we can find that here. Alchemy of Finance. There you go. So this is, I think is this one. I'll put this maybe in the notes or something. But it's this episode if you want to learn about that. But I think I explained it pretty well. It might really be all you need to know. So, but yeah, a lot of times it's not necessarily the fundamentals that drive it, but even a price of a stock or something like that going up can drive and create fundamentals. Like Tesla, I think that happened in that case where the investors push the price up, which causes the company to do better and drives the fundamentals, not the other way around can happen. So, but anyway, that's it. So subscribe, make some comments for me, help me out with the YouTube algorithm. Share this with your friends if you find this helpful.